when should we start to talking about tapering? What do you think?
Well, we don't think so right now. So what we have is we've had some good data on the economy, Sarah, a very strong employment report, a gangbusters GDP report, but we're still a long way away from our goals. And in our new framework, we want to see actual progress, not just forecast progress. So as we move through the year, we'll get more data. We'll get an employment report on Friday. And as we go through the year and we assess that data, we'll be able to make a judgment about substantial progress, but we're certainly not there yet.
Is there anything specific you're watching? For instance, President Barkin told us employment to population ratio. It's just hard, the term substantial progress, to think about how you define it. Because, yes, we've had one really good employment report, but we've had some other tremendous data as well on services, on manufacturing, obviously on housing. It's a pretty broad-based picture of improvement.
It is, but, you know, Sarah, and as you know, because you've reported on it, the pandemic was a catastrophic shock to the economy. 22 million jobs were lost in 2 months. A lot of those are back now. We're about 8 million jobs short of where we were in February. So we're going to be looking at a lot of indicators. But first and foremost, the unemployment rate and true unemployment is really closer to 10%. But yeah, labor force participation and other indicators. But again, we're digging out of that hole, and that's great. But there's more to go.
Vice Chair, I was wondering what you thought the kind of intention was yesterday when Janet Yellen made the remarks that she made. Do you think it was a slip of the tongue she accidentally made and then had to walk back, or was she trying to sneak a certain message out into the marketplace?
I have enormous regard for Secretary Yellen. I think she indicated that she was not predicting or giving us advice on policy, and I'll take it at her word on that.
Well, fair enough on that front. But I wanted to lean on one word that she did use, which was overheating. And whether or not, regardless of what it might mean for policy, if you now look for the rest of this year, that there is a higher chance that the economy overheats than it underwhelms from here.
A good question, because, you know, Wilfred, when you're doing forecasting, you have a baseline view, and our baseline view is that we don't overheat. That being said, there's always risk to the outlook. And as Chair Powell indicated, and I've indicated, and others, in that risk case, as we go into next year and beyond, if there are unforeseen, persistent upward pressures on prices that would move inflation above a level consistent with our mandate, we would use our tools to bring it down. So we don't see overheating as a baseline. But of course, in any outlook, there's a risk. I would also say, Wilfred, unfortunately, there's a risk to the downside. This virus has proven difficult to bring under control. The vaccines have been an incredible development, but a downside risk would be if we were to get, you know, a vaccine-resistant strain, which certainly I'm not predicting or hoping for. But as you're looking at, there are risks to both sides of this outlook that we have to factor in.
Just on inflation, Mr. Vice Chair, just wondering how you're reading the current market action. As we speak, there's a headline going by: break-even inflation on 5-year U.S. Treasury inflation-protected securities goes to the highest level since 2011, 2.695. We've seen this in the 3-year inflation expectations, 5-year, 10-year inflation expectations. What does that say to you?
Well, there are a couple of things, and indeed, you had some reporting right before I got on. If you look at the forward measures, say inflation starting 5 years in the future, those are actually under the next 5 years, which is indicating that if you use those market prices, they're not forecasting a big breakout that would persist. Look, there will be some upward pressure on prices as we reopen a $20 trillion U.S. economy and a $100 trillion global economy. There's going to be some temporary imbalances between demand and supply, but we think over time those will work out. And so our baseline view is that inflation is going to be close to our long-run objective of 2%, but we will be vigilant. And in particular, as we move through the reopening phase of the global economy, we'll have to be very attentive to that data. But that I think what the data is telling us now is there's going to be some upward movement as we reopen, but that it won't persist.
Shepard Smith here. Thanks for watching CNBC on YouTube.